Welcome to the Market in Motion podcast for financial advisors, presented by FMG Suite. Listen to interviews with the movers, shakers, geniuses, and innovators of the financial advisory world. Visit fmgsuite.com to discover more great resources and products to transform you into an extraordinary marketer and grow your advisory. And now, without further delay, the Market in Motion podcast for financial advisors.
Hi, everybody. Mike Woods here, one of the founding members of FMG Suite. Welcome to the Market in Motion podcast for financial advisors presented by FMG Suite. Today, I'm excited to be speaking with Bill McManus, Managing Director of Applied Insights at Hartford Funds. Hartford Funds is rather prolific with its research, and Bill is part of the team that's cranking out material on a regular basis. In September, Hartford Funds released an awesome series of white papers related to the 2020 election. The white papers looked at how the financial markets performed with a Democrat in the White House and with a Republican in the White House. But more importantly, the white papers presented a sense of calm in an otherwise hectic election season. At FMG Suite, we're big fans of Hartford Funds research, so we were excited to hear about the new research regarding ESG investing. So sit back and take a listen. ESG investing is becoming layered into the fabric of American investing. So as a financial professional, you have to become fluent and join the conversation. Hope you enjoy the podcast. Spread the word. Bill, it's great to have you on the podcast today.
Thanks a lot, Mike. I'm glad to be here.
Well, as many of you know, Hartford Funds is rather prolific with its research. Most recently, Hartford Fund released an awesome series of white papers related to the 2020 election. The white papers looked at how the financial markets have performed with the Democrat in the White House, with the Republican in the White House. But most importantly, the white papers presented really a sense of calm in an otherwise really hectic election season. So at FMG, we're big fans of Hartford research. And so when we were very excited to see that they put out the research about ESG investing. And that's what leads us to today. We're going to talk about ESG investing and some of the research that the Hartford Funds put together. So, Bill, can you give us a little background on yourself before we dive into the podcast?
Sure, absolutely. So I started with Hartford Funds in 2003 and have served in a couple different capacities. But most recently, almost over the last decade, I've been a managing director on our Applied Insights team. And basically what we do is we call it all of our non-investment related research from really several strategic partners that we've built up over the years. We partnered with some of the top thought leaders and academics and practice management experts in the industry. And what myself and my team does is take this content, this information, bring it out to the financial professional and ultimately their clients.
Gotcha. Good stuff. Well, I tell you, for FMG, when we find a source of research that really provides consistent, well thought, well conceived, very timely, very balanced information. It's a great resource for us. We really I did a podcast with the Hartford Funds with the gentleman I don't recall his name at the moment, who put together the research on the election, and it was really good stuff. So I'm excited today to talk about ESG investing. So let's set the table for everybody, Bill. I wanted to say that about 30 years ago, I was a cub reporter working for Investors Business Daily, and I got the assignment to go and interview an up-and-coming money manager called Amy Domini. And Amy Domini at the time was not really well known, but she was doing this thing called social investing. And I didn't get the Peter Lynch assignment. I didn't get to go to Fidelity and interview Peter Lynch. I had to go and work with Amy Domini. So I was like, we'll make the best of it. But one thing stood out to me really as I was interviewing Amy, and this was 30 years ago. She was talking about social investing and having guidelines and expecting things from companies and putting together principles. And this was, a long time before there was any real thought to this. And she only had 12 or 15 funds in her portfolio, or 12 or 15 stocks in her portfolio that met her guidelines. And she was developing the guidelines. So fast forward to today, and at last check, I read that 311 S&P 500 companies now qualify for S&P's ESG index. And boy, has the world changed rather rapidly. So first question over to you, Bill, is kind of at a 30,000 foot level. Let's talk about Hartford Fund's history with the environmental, social, and corporate governance investing, and what led to your most recent research.
Yeah, absolutely. And I might just take a quick step back as to
Sure.
the why we do this research, and then we'll certainly jump into that. And you
Hmm.
mentioned before the interview you did with my colleague, John Deal, on the
John Deal,
election.
President.
Yes,
Yep.
yes. And people's sentiment. One of our biggest partnerships, as I mentioned before, we've got several, is with MIT and a program they have called the Age Lab. And they do a ton of work on investor decision making and behavior. And one of the things that we find that investors are seeking from the financial professional, more so than even investment returns and results, is personalization. And they define that as, do you understand me and what's important to me? So sort of in that vein, we are constantly looking for opportunities to really get a pulse of the public, so that we can take this content and help financial professionals be more informed about what it is that their clients are looking for. So that's what leads us to do a lot of these surveys. This one in particular, we had an interest in. Hartford Funds has always been interested in ESG investing. And as we've seen, really the shift, as you were mentioning, over the last 30 years, that's caused it to be more popular, I think. It went from, I think, from a mindset standpoint, ESG investing to being exclusionary, right? Where we're going to
Hmm.
exclude out certain, industries or companies or products, to now being basically an inclusionary, where it's a part of all of the investment process that we do. So that being said, at Hartford Funds, we are a sub-advised mutual fund company, and our two main sub-advisors, Wellington Management Company and Schroders, which, as we know, are both big global institutional money managers. They understand that ESG issues that can basically have a material impact on the investment thesis, and being that both of them are, they consider themselves long-term stewards of clients' capital, understanding ESG and industrial trends are basically intrinsically linked.
Sure.
Both of those organizations have incorporated ESG analysis and thought process across the entire firm's platform. So it's a part of every mutual fund that we offer.
Gotcha. Fascinating. Yeah, it's fascinating. I've read some of the research that came out of MIT with the Age Labs, but that you touched on something very interesting there. Just that the financial professionals need to understand me and what I want. And
Mhm.
boy, that really is kind of at the heart of the whole ESG movement. It's people really defining their values and how they want their investments to reflect that.
I agree 100%.
So as I look at it, ESG investing really has regained really so much momentum that it really almost belongs on really page one of a financial professional's discovery document. It seems like it should be right up there with: Are you investing for growth? Are you investing for preservation of principle? The next question should be really: How important is ESG investing to you? How do you how do you position it in a financial professional's mind?
Yeah, so I think a lot of it is that maybe mindset shift of what they may think it is, to again understanding that it's a very important part, obviously, of the investment process, incorporated now, and having the financial professional talk about that, discuss it, make sure that their clients are aware that it's something that they are thinking of. We think it's just going to be increasingly important, and we'll be able to see that from some of the data from this survey as to the why it's important.
Gotcha. Good. All right. Well, let's jump in. Let's jump in and kind of have you take us through the research. And I always start with the most surprising and what's the least expected. But take us in and Bill, give us kind of a good insight as to what the finding what were the most compelling parts of the findings.
Yeah, and it's interesting. Actually, I'll start with the least surprising,
Oh,
and
okay. All
I
right.
think it speaks to exactly what we were just talking about. The least surprising is we've seen an increased interest in ESG investing across the board, from a demographic standpoint, across all generations, across all genders. And what we've seen, a lot of this work was done in response to COVID, and we've just seen a massive acceleration of interest, which I think COVID has done that to a lot of trends that
Sure.
we experience on a daily basis. So the fact that there's more interest, the trend was there beforehand for numerous reasons, which we can discuss, and we've seen it be accelerated for numerous reasons which we can discuss. But the top reason that people cited for more interest in ESG investing was COVID-19, actually.
Interesting.
So
Fascinating.
I'd say that's that was the least surprising. Some of the
Uh-huh.
surprising things I saw within, as we really sort of dug into some of the generational responses, some of the biggest increase, maybe it's my own biases speaking, but you would think millennials, Gen Z, right, younger investors, but actually Gen X saw some of the biggest increase in interest in ESG integration into their portfolios. So I thought that was surprising. And then also some of the differences between uh, men and women and their responses to it, which I think we can touch on as we go through the call.
Sure. Well, let's jump into let's break those down. Let's take a look at the last one you mentioned there. Differences between men and women and their approach towards ESG investing.
Yeah, so what we saw is actually men having more of an interest in ESG investing than women. And as we look to the future based off of potential changes that we could see, we saw women have an increased interest, but not as much as men. And what I think that speaks to, I actually don't think that has anything to do with ESG investing. Through
Sure.
other research we've done with the Age Lab in terms of, again, investor decision making, we find men are much quicker to make decisions, and we tend to focus on bottom line results. So we'll look at a small subset of information, we'll make up our mind, and we'll make that decision. Where women are much, much more prudent, and actually it pays off in research that we've done
Sure.
in terms of investment decision, much more likely to do research, much more likely to want to have a really full understanding of a certain topic, idea, investment thesis before making decisions. So I actually think that speaks more to that aspect of it, and I certainly expect women to accelerate interest as they become more informed, more researched, and go to make their decisions.
Yeah, boy, I've seen that research too. It tends to um, uh, women tend to be better longer term investors than men. They
Way
they
better, way better.
they show a lot more patience than men do when it comes to investing.
Yes, let's just say we are a little bit challenged. Like women are much, much better.
All right. Well, let's take a look at let's jump into those individual groups, the Gen X, Gen Z, and millennials, and really kind of sweep in baby boomers. Kind of what the findings were.
Yes. So we saw initially in terms of pre-COVID, there was a higher interest amongst, millennials and Gen Z, which is probably not surprising. A lot of the focus, interestingly, when we break out the three components of ESG, primarily focused on the E and the S. And I think that just speaks to, those are a little bit easier, I think, clearer to define, right? We understand what, environmental impact could do or sort of the social aspect of it.
Sure.
The governance, which actually that in a lot of cases can I don't want to say it's the most important one, but it can certainly give you a window into how a company behaves, which will certainly trickle down to all of those other issues that we're talking about. Actually garnered the least interest. I think maybe it's just a little bit harder to define.
Right.
But that being said, we have seen an increase again across all different generational cohorts in terms of wanting to understand more and integrate more, ESG type investing into their portfolios. I mentioned before some of the largest increase in Gen X, which that's telling, right? If we think about the financial professionals that are sitting out there and thinking about their business and practices and the clients they want to serve over the next 10, 15, 20 years, right? That Gen X is really the sweet spot of earnings and need for advice and really where advisors can have an impact. So I would be very conscious of the results of that survey when talking to that specific Gen X generation, understanding that there is a interest and a want to incorporate more of this into their portfolio.
Right. Gotcha. I wanted as I looked at the research, one of the questions that I thought of was, are parents influencing kids, or are kids influencing parents? Did your research kind of indicate who was more the guiding force, or were they co- were each age group coming to their own decisions and using those decisions and influence each other?
I would say probably more peer to peer influence.
Uh-huh.
Now, taking a step back from that, in a lot of cases
Sure.
now, peer-to-peer could be, a kid to mom and dad.
Right.
We've seen other research where, younger generations, younger millennials, when asked about who you would take medical advice from, the first answer was not from a doctor, it was from mom, which is kind of interesting. So as we talk about, some of the sort of delayed, I guess, stepping stones to, traditional adulthood maturity. I mean, that since they've been delayed, we do see a little bit more of a reliance on, mom and dad, which I think goes both ways. But certainly that peer-to-peer, interaction can drive more interest. And speaking of that, we kind of just look at
Sure.
just awareness and adoption and interest in ESG overall. I mentioned before, trends that already existed that have been accelerated. So, if you think back pre-COVID and back when we were really starting to be interested in this, a couple reasons. Number one, just access to information that we have, right? As you mentioned before, 30 years ago, not too many people delving into this type of investing, and certainly much more difficult to access information. So now, we've got volumes, right? And the velocity is coming at us extremely quickly. The just awareness that that's even an option, or it's even something that asset managers are thinking about. Certainly the fact that more products and funds and ETFs are available, right? All of these things were sort of bubbling up to drive interest, and then you come into March where obviously you had a sell-off in the market, which will immediately, after 9 years of a bull market, people not really thinking about their investment portfolio. A correction certainly has people, reevaluate
Right.
and take a deeper look. Oh, and then, we're spending more time at home. We, again, have more access for information. We're more tuned in, than we've ever been before. So I think you get all of those things sort of coming together in the perfect storm that has led to increases in interest as we've seen in our data.
Gotcha. Fascinating. Fascinating stuff. Yeah, it's, as you think about the different groups that you broke it down into, millennials, baby boomers, Gen X, Gen Z, are there are there any safe areas that were common to all the groups? Did all the groups have any? Was there was there a consensus area that they all felt in a certain way? And the contrast to that would be, were there any groups that had differing opinions that kind of stood out in the research?
So when we sort of take back a step back and look at broad questions, one of them was, people think that, investing with sort of an ESG mindset or incorporating that, and implementing it into your portfolio, will that have an impact? And what we found is a vast majority said either somewhat or absolutely. And that was consistent across all different age cohorts. So that's just
Mm,
stepping back from a mindset. In,
sure.
in terms of actual integration, we do see a lack when we get to older generations, the baby boomer generation. I'd be interested in, and we didn't dig too deep into that behind the why. I don't know if the why is necessarily not interested in it or don't want it to be incorporated in my portfolio or I don't buy it or whatever it may be. I think it's more, you think about a baby boomer that has, a more established portfolio. Obviously, you've got tax considerations and all types of things that go into that they have to discuss with their financial planner to then be able to integrate some of that stuff.
Sure.
But like I said, it's now, every major institutional asset manager, or all of them, it's all being considered as they're, picking out stocks for their individual portfolios. So people have it incorporated into their portfolios already.
Yeah, it is a the wave really is, I think, is still forming, because you do
Hmm.
see it. Uh, Companies now have more elaborate pages on their ESG approach in their annual reports, in their 10Ks that they file. 10 years ago, it was more of a passing message. Now it's a now there's a now there's a tremendous focus on it, and so really, an individual investor or somebody who's working with a financial advisor who has an interest in a company in that capacity, it's going to be more front and center for them, this type of research.
Absolutely. I totally agree with that.
Gotcha. Okay. All right. So, last question, and we'll probably spend a little more time on this one, because it's real. I think from a from a financial professional perspective, it's critical. FMG recently created an ESG article, and we put it in our library. And I got a lot of pushback from, well, not a lot, I would say, but more than typical. I probably talked with two or three financial professionals who said, "Hey, it's ESG investing is just not part of my approach, and it's not an area of interest for me." The Hartford Funds research would suggest that these financials may be misreading the trends. Kind of give us a perspective on how financial professionals should approach the topic of ESG investing when working with customers or current clients or prospects.
Yeah, absolutely. And I think that, that response that we would get from financial professionals, because I've heard that as well. And I think that's based off of, an initial reaction that people might have when they hear ESG. And, that's driven off of, mental models or past experiences. And as we were talking about before, ESG for a long time in its, I guess, history, or as we've been aware of it, the thought was it's exclusionary, right? It's excluding
Right.
out, again, as we mentioned before, certain sectors or industries, and maybe financial professionals could see that as limiting to what they believe is their ultimate goal, which is providing, returns for their clients that are appropriate to their, needs and goals. So
Right.
I feel that reaction that we get from financial professionals is more based off of that mindset. Whereas now the shift has been, as we mentioned before, being, inclusionary. It is a part of every, portfolio that people manage. So based off of our data, seeing that clients have an interest in it, we do think that it is, prudent for financial professionals to at least make it more part of the value statement, understanding that this is something that we are thinking about and providing for clients.
Gotcha. Yeah, it's there was a time, and boy, I would say probably a dozen or so years ago, when you'd have various research institutes look at how socially conscious investing has done, and they were tended to be kind of a beat slow.
Hmm.
They weren't able to keep up, and largely because they were not able to invest in that cross section of companies. But I can't remember any time in the past, well, I'll say 2, 3 years that I've ever seen anything that would suggest that ESG funds are lagging any longer. Some may be leading, but they seem to be kind of right in the mix, right in the bell curve of returns. They don't seem to be well, as we discussed, so many S&P companies now that ESG rating is so important for them to earn and keep. Just because of their role in the community and in their role really with shareholders. Um, has your research shown that ESG funds are perform, like I said, kind of right in the bell curve, right where you would expect?
Right. So, for this, specific survey, we focus more on, investor sentiment.
Sure,
But
sure,
I have not seen any outsized returns, one way or the other, especially as we talk about recently. So I
right.
think with that mindset, if a financial professional can speak to their client and, talk, sort of the tagline that you hear sometimes with ESG is, doing well by doing good, right? So we're
Doing
still
right.
being able to provide returns for your portfolio and the things that are, important for you long term, and as that works, but also, being aware that we're investing in companies that are, I think that really the sustainability is certainly a key aspect of this. I think as we look to the future, companies that are focused on this and really can focus on sustainability are going to be able to again do well over the long term. Kind of interesting. I do a lot of client events for financial professionals, and this
Uh-huh.
topic came up just yesterday, where a particular client asked, she wasn't totally aware of ESG, which maybe speaks to some of the financial professionals and then some of the things that they need to talk about with clients. But she, it was kind of off topic, but she brought it up. So obviously it was on her mind. Now, this is an anecdotal story, but she, brought it up and asked about, sustainability and what type of investing can we do to ensure, that we are doing good. So I think, between our survey and then some other stories that I've heard, I think it is going to continue to be important for financial professionals to, bring it up a little bit more to the forefront of their value proposition.
Gotcha. Yeah, it certainly it certainly is boy, it seems like a financial professional that doesn't really incorporate that into their dialogue is I wouldn't say they've missed the boat, but it certainly does feel like they're misreading the market because this is now not a it's really not a nice to have anymore. It's kind of a have to have. Really have to have that address that ESG part of the equation because I would say it's almost what your research kind of indicated. Well, what it came through loud and clear to me is that the investors out there they're very attuned to this. So it's something that the financial professionals need to stay in tune with and stay ahead of so they can be really proactive in these conversations.
I mean, absolutely. Let's just say I see no downside, right,
Yeah.
of having these conversations, or at least talking about it with clients where it's important. But then it goes back to that whole idea that I started with personalization, right? Do we
Oh,
understand
right.
what's
Sure.
important to clients? It's funny. The other thing that ties into personalization is empathy, right? Which is definitely, do
Mm,
you understand me? So empathy and personalization. We have to have these conversations with clients to again understand what's important to them, which financial professionals are the best at doing that. Maybe now we just have to sort of layer in some other topics. It's
gotcha.
like the same thing we do with our partnership with the MIT Age Lab. Talk a lot about longevity planning, where a generation ago that might not have been the biggest topic that you would have. Now certainly forefront. Same thing with ESG. We talk about trends accelerating.
Gotcha. Good stuff. Okay, so I'm going to put you on the spot here. Last question, then we'll sign off. Was there any one stat that, as you did the research, you go, "Wow, that's really fascinating"? Any one stat that stuck out with you? And as I looked through the through the information, there was so many interesting stats. But was there one that really stood out to you as the person behind it?
I would say that all the statistics point to this one idea, and I'd say it's not going away. This
Yeah,
whole idea of people is important. So again, thinking about the increases that we saw across all different generations, across all different age
interesting.
cohorts, I think that's the most telling part, right? We saw this increase in interest, and that trend is not going to go the other way,
Yes,
in our
gotcha.
opinion. So to me, that's the big takeaway from this, and I think can be helpful for financial professionals to really understand that.
Gotcha. Okay, Bill. Great stuff. Well, Bill, thanks so much for spending time with us today. Certainly great insights into ESG investing. I think that's a great takeaway that it's just not going to go away. And if you haven't, it's time to really brush up. And gosh, we'll probably start to see this stuff on continuing ed classes pretty soon. And I'm surprised FINRA won't have it in certain exams probably within the next year.
Mm, I agree with that.
It's coming.
Got to stay up
It's
to date, that's
coming.
for sure.
Bill, thanks again. Thanks, listeners, and we'll be coming to you next time.
Thank you.
Thank you for listening to the Market in Motion podcast for financial advisors. If you found this episode informative, please share with your peers and colleagues. Visit fmgsuite.com to discover more great resources and products that transform you into an extraordinary marketer and grow your advisory. Subscribe and get updates delivered right to your inbox.